Hello guys, today we're going to talk about the stochastic oscillator. The stochastic is an indicator that measures momentum. Price momentum is the rate of change of the price, and usually momentum changes before the price reverses, so stochastic is useful for measuring divergence. Stochastic is also an oscillator. That means that it shows the price relative to a previous high-low range, so it's useful for identifying oversold and overbought areas. Stochastic oscillator plots two lines. The first line is called the percentage K line, and the second line is called the percentage D line. The formula for the percentage D line is close minus low divided by high minus low multiplied by 100. The default value of the indicator is 14 periods, but you should play with your settings depending on your trading system and set it to whatever suits you best. 14 periods on a daily, for example, time frame will represent the value of the indicator for 14 days. Let's go to cTrader and I'm going to show you how the stochastic indicator looks like. So I've plotted here a EUR/USD 1 hour chart. So let's press the F button, which is for indicators. Let's go to oscillators and let's find the stochastic oscillator. The default value of the indicator is 14 periods, and we see here in the window that we can configure the percentage K periods, the percentage K slowing, the percentage D periods, and the type of the moving average. The percentage K periods is the main setting for the indicator. It configures the period for stochastic. The K slowing, usually we leave that as 3, this is the default value. When the indicator first came out, there used to be a fast stochastic and a slow stochastic. If you use the value 1, it's going to be the fast. 3 is the normal value. The D periods is the periods of the percentage D line, which is a moving average of K. So let's plot this indicator. We see that the indicator is oscillating around level 50. Its minimum value is 0 and its maximum value is 100. It's considered to be oversold at level 20 and below, and overbought at level 80 or above. The green line that we see here is a percentage K line, and the red line is a percentage D line. Let's see how you can use the indicator in range and trend markets. If you don't know what a range or a trend market is, you can check out episode 7 that explains these concepts. The first and most obvious signals that you get from stochastic oscillator is identifying overbought and oversold areas. As I explained before, it's considered to be overbought above 80 and oversold below 20. You cannot be, however, trading all these signals randomly. You have to be trading the signals in context. That means that you have to establish that the price is not doing any higher lows or higher highs, because going short and long with overbought and oversold areas works better in a range. So let's go back to cTrader. In this case, in the EUR/USD chart, we see that the price is currently not making any higher lows or higher highs, or it's not trending, it's just oscillating. So using the oscillator, I'm going to mark the level 80 and level 20 for you. For overbought and oversold areas, it's going to be a good strategy to use. So you see, you can go short here, it's considered overbought, we're going to get money. We can go long here, again we're going to make money. Here we have another short signal, again we're going to make money. Long signal, we're going to make money. You see, all the signals are very successful if the price is not trending. The indicator doesn't provide with a way to put your stop loss, so you can be using a risk to reward ratio, or you can use any other of the stop loss methods when placing the orders. It also makes sense to use Japanese candlesticks when using any type of reverse strategy, like this strategy that we're using now. So for example, you can wait when the price goes above 80 or below 20, you can wait for some reversal that you confirm with Japanese candlesticks, like the hammers that you see here or anything like that. If you're not familiar with candlesticks, we're going to watch episode 9. However, if you establish that the market is trending, so if it's doing higher lows and higher highs, for example in an uptrend, then you're not supposed to be taking all the signals of the indicator. You should only take all the signals that are with the direction of the trend. So let's go back to cTrader, where I have found a trend here. We identify a trend by it's doing higher lows and higher highs, so we have an uptrend, you see here. In this case, we're gonna be taking only the signals that go with the direction of the trend, because the price is going up. We don't want to take the opposite signals, because we're going to be trading against the trend, and there is a very high probability that we're going to lose money, and we'll also, even if we win, we won't be making a lot of pips. So in this case, you should be taking this signal and this signal, and or this signal. All those signals are going to be successful because they are in the direction with the direction of the trend. Another way of using the stochastic oscillator that is not very famous but it's very successful is by plotting two oscillators with different periods. One of the oscillators is going to give you the general direction of the trend, and the other oscillator is going to be the one that you use to enter your signals. Let's go back to cTrader where I'm going to show you exactly what I mean. We have here the first stochastic oscillator that we drew, the one with the default periods. So what we're going to do is we're going to draw one more stochastic. This one is going to have high periods. I'm going to put 150 for K and 75 for D. And then what I'm going to do is I'm going to remove the K line completely. And we're going to mark the level 50. So here's the level 50. So what we're doing now is we have the big one, the one with the 150 periods, giving us the overall direction of the trend. The market might not be trading all the time, but it gives us even the slightest slope is going to show it to us. And the other indicator is used for entering the signals. So for example, here we see that this indicator, the big one, is above the 50 line. That means that my direction is long. So what I'm doing is I'm going to the small one, the fast one, and I'm getting only the long signals like this one, this one, this one, this one, and I'm successful because I'm trading with the overall direction of the trend. And then again, when it goes short, again I'm doing the same thing. Now it went below 50 line, so I can be getting all the short signals, and again I'm going to be successful. So this is a nice trading system especially for those of you who are difficulties identifying the trend. The last way of using stochastic oscillator is for spotting divergence, which is the most popular way, and it's actually the reason why the creator created the indicator, mostly for spotting divergences. So let's go back to cTrader where I'm going to show you. And we're going to use the small stochastic indicator here. So let's remove the big one, the big indicator. Let's press the X button to remove it. A divergence occurs when the price is going towards a specific direction and has a specific slope. For example, here the price is it has an upslope, and the indicator has the opposite slope. Let's remove the K line because we use the D line for spotting divergences. And as you can see here, the price is constantly doing higher highs. However, the indicator is not doing higher highs, it's going lower, especially this spot here exactly. The price is going to the same level. However, the indicator starts going low, so we have the opposite slope. So it makes sense to go short. You spot for divergences after a trend because divergences are used to reverse. So in this case, we can enter short. We're going to make money. Again, the same thing. Here, then the price is doing a downward slope. It's going down. Again, the indicator shows another divergence in this spot. See, the price is going up, the price is going down, and the indicator is going up. So we can also enter long here. Again, we're going to make some money. In this video, we talked about the stochastic oscillator, and I showed you how to use it in your trading and how it's calculated. Usually, we use the stochastic oscillator to get overbought and oversold areas, to spot divergences, and we use it. We plot it 2 times to find the overall direction of the trend. In the next videos, we're going to talk about indicators created by Larry Williams, or maybe we're going to do momentum oscillator. If you like this video, don't forget to subscribe, and if you want, share it with your friends. Thanks for watching.